right, after 2 terrible, horrible, no good days, yep, it's worth sifting through the rubble to take a closer look at some of the hardest hit stocks in this newly awful market. Take Wex, that's WEX. It's a financial technology company in the corporate payment space that handles fuel cards, travel cards, employee health and benefits programs. This formerly red-hot stock has already plummeted more than 12% from its highs last Thursday, although it's down only 1% for the year. Now, we know Wex was doing well before the coronavirus outbreak because they reported a terrific quarter with great guidance earlier this month. Plus, in recent years, the company's diversified away from fuel payments, making it much less sensitive to the gyrations of that portion of the economy. So has the stock come down enough to be worth picking at? Let's take a closer look with Melissa Smith, the terrific chair and CEO of Wex, who's made investors a fortune, to get a better sense of how our company's doing, where it's headed. Ms. Smith, welcome back to Mad Money.
Thank you. Good to be here.
Okay, since we've seen you last, you've made a couple acquisitions. You did eNet and Optal. I want to know how Wex has changed from your last appearance.
Well, we've grown a lot since the last time we met. We had a really great quarter, you just mentioned.
Yes.
And included in that, we just announced 2 transactions. We have not closed them yet.
Okay.
Optal and eNet. It expands our presence outside of the United States. We liked how it fit with the geographic diversity that we have with our business.
Right.
We also like the further expansion that we have outside of our fleet business into more travel-related products.
Okay, so when you were on last, someone stopped me and said, I really like Wex. I thought that one was terrific. How do they make money on that Shell deal? And I said, okay, I'll ask her.
Okay, so Shell, we love Shell. It was a new client this year. We moved the whole portfolio over. So think of that as someone is paying for their fuel. They're using a Shell card. These are businesses, and we earn a percentage of what gets spent at the fuel location, and a few ancillary fees from the customers.
So now, when I look at the whole mosaic, you've got the terrific deals with the gasoline companies. You've got these companies that are doing B2B payments, solutions to the travel industry. How much are you still a company that truckers rely on?
So truckers are actually a pretty small part of our business.
Right.
So think of even our fleet business, which is 60% of our revenue. The trucking part is a relatively small part of that. Think of people that are making service calls. It may be a contractor. It may be a florist. It could be the federal government. You know, it's all different size of companies that just happen to have vehicles. And then in addition to that, we have some 18-wheel trucks. All
right, I'm glad you said that because, you know, trucking is being hurt right here. It's down 9% year over year, and I'm sure there were people who say, well, maybe that's why the stock's been hit, but you've just ameliorated that worry for me. Now, you did get bigger in corporate travel. Now, we've got to talk coronavirus. I feel terrible that we have to because it's going to be a metaphor that's with us for a long time.
Yeah.
But did you double down on an industry that short-term could have problems?
We love the industry over a long term.
Over the long term.
Yeah, over long term. You know what I think? We make decisions that are long-term based. And what we're seeing, and as you said, I feel horribly about the coronavirus and the impact of that. I mean, it's not a great thing to be talking about. But if you look at market research, you can see based on some of the past issues that we've had, they tend to be short-lived. So think of that as like a 6-month period of time with a pretty rapid rebound.
Right.
We haven't closed the transactions that we have out there. We also like the geographic diversification that gives us. So I think of, you know, if you have things happening across the world, they're typically happening within regions. So we actually think there's a benefit, and we're excited about it.
Now, I know that Expedia had some bad news today because they had a bloated infrastructure. They're talking about it. eNet's core customers include some of the largest online travel agency customers in Europe and Asia. Are they doing better over there?
So about 40% of the volume is in Asia, 60% in Europe.
Well, do we have to worry about China?
But most of the business in Asia is outside of China.
Okay. See, because, I mean, I need you. You're a seasoned hand. You've created tremendous wealth. The stock is up huge. The revenues are up huge. I think people at home are trying to figure out, okay, well, what does a really good CEO do when faced with when you have a CDC person who's basically saying, well, you know, look, I'm worried about my children. I mean, this is not a regular environment. Yeah.
Well, I think the most important thing is to be calm. You know, when we make decisions, they're
short supply.
Well, you know, when we bought a company called EFS a few years ago.
Okay.
When we bought that company, same day that we were pricing the debt, the Brexit vote happened. Right? It's not an ideal situation. That transaction has been phenomenal for us. You know, so I think people forget that these things happen. They have an impact, but they're short term, and you kind of just move through it. And I think that's part of what we do as leaders is remind people that it is short term.
What we do as leaders, that's great. I really like that. Thank you so much. Okay, that's Melissa Smith, Chair and CEO of Wex, dealing with tough issues and I think creating wealth again for shareholders. Stick with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.